From the floor of the CME Group, this is Danny Riley with today's pre-cash close. We're going a little early because our guy Jeff has got to hooskow out of here. The name of this video, the FOMC minutes and the S&P 500. The high of the day in the S&P came in at 21.32 even recently. The low came in at 21.19 half early. At last, we're 21.28 half. We're up 4 handles on the day. Total volume, we've got 780,000 minis traded and 1.3 thousand big S&Ps traded in the pit. Tomorrow's the busiest day of the week in terms of economics and earning release. We've got the jobless claims, we've got the Chicago Fed National Activity Index, we've got the PMI Manufacturing Index, we have the Philadelphia Fed Business Outlook Survey, we have the existing home sales number, we have the leading indicators, we have the EIA Petroleum Status Report, we have the Kansas City Manufacturing Index, we have a 3, a 6, and a 52-week, our 52-month T-bill announcement, we have a 2, 5, and a 7-year note announcement, and we have Stanley Fisher from the Fed speaking, the Fed balance sheet, and money supply. Whoosh! I don't even know why I talk about that old stuff. But anyways, look. The S&P bounced a little bit overnight. Foreign markets were pretty mixed. There wasn't anything big showing in Asia or Europe. And then after the S&Ps opened up, they rallied up to the 21.26 level and then pulled back down to the 21.21 level and then basically stayed 21.24, 21.25 for most of the day or up until the Fed announced the minutes came out. Now, here's my question for you. Is there really any surprise in what the Fed minutes have to say? We already know that they can't hike rates in June, and more than likely, they're not going to be able to hike rates in September. All the hoopla about raising rates, I'm still in that camp where I don't think they're going to be able to raise rates at all this year. I think we're kind of stuck in the zero borrowing environment, and as we go into the end of the year and with Europe printing money like mad, I don't think they can do too much right now. But anyways, I still think that we're setting up for some type of pullback, but I have to admit that the low volumes are definitely working in favor of the bulls here. So, you know, I am a bull, but I'm just kind of being a cautious bull. I think that there's still some back and fill needed before the S&P goes back up. Now, the last part about this is there's a lot of talk that many of the traders I talk to and on the street, they think that there's a possibility that the S&P could accelerate to the upside. And not only could they go to 2150 or maybe even 2160, maybe we're even going higher than that. But here's what I think happened. Once the psychology flip-flops from everybody being bearish and negative into decline to being all positive and happy about the upside, I get a little leery. And the other part about that is that we've run most of the big buy stops out on the upside, and the sell stops are starting to build up. Now, right on the high ticks of the day, when after the Fed minutes came out, we traded up to 32 even. You can see there was absolutely no volume on those high-end prints. So you know what? I'm going to leave it like that. I think I've heard a little bit about that there may be small to buy MOC, but you know what? We'll have to put that out on Twitter as we're going a little early today, and I'll see you guys tomorrow on the opening print.